Welcome to the market update of Belvoir Capital for the beginning of September. The summer season is coming slowly to an end, and we've seen in August and July a little bit of a slowdown of the markets, especially on the equity side. We saw corrections in between 1% and 3%. This was due to the interest rate, which increased, especially the 10-year treasuries, which had been at the beginning of the year around 3.3% yielding, now to 4.3, almost 4.4% at the end of August. And when you see such an increase on the yield on so-called risk-free rates on the 10 years, then this is very difficult for equity markets because the risk-free premium has been increased and the equity premium is going down. So this is something which is very interesting to watch. And we've seen also that the earnings season, this time for the first time, has been a decrease of roughly 5% compared to the same period in the previous year, meaning that the earnings, the overall earnings for all corporates in America, we're watching here especially the US market, was down by 5%. And this means that the valuations of the companies increased. But on the other hand, the analysts predicted pretty well, and around 65% of all corporates reported above estimates of the market. So this gave a very good support to the market. So we haven't seen a big correction. And going forward, what we expect for September is going to be very difficult because September usually historically is always a difficult month. No earnings season and no updates. So people watching and not really know what to do. And we've seen the coming in the interest rate cycle to an end, especially on the hike side, on the US side. And in Europe, we see longer interest rates higher for longer. So this is what we see. And therefore, bonds will be an alternative. And the risk assessment, where to put the money in terms of the asset allocation, equities, bonds, cash, or whatever you want to do, it's going to be more towards bonds. And because the risk-free rate is higher. And therefore, you should watch out what you select on the equity markets. It should be quality. And inflation is still high. Came down a little bit, but it's still high. So you have to select very carefully those equities which can take over those inflation rates into higher prices and keep the margins and keep the earnings growth steadily on the upside. So September, we'll expect a difficult month to be, but we're not negative. So we stay invested, but slightly underweight in terms of the overall allocation in our portfolios. So we see you back in October, and we are very excited what we're going to expect now from that, what we've seen in September.